We're getting older as a nation, and then there's particularly older spots. Southern California definitely is part of that, and where we live in particular, in Huntington Beach and Orange County, certain parts of Orange County is getting quite a bit older on average. So the reverse mortgage topic is coming up a lot more than it used to, I would say. The reality is a big percentage of retirees have fixed incomes. And then I'm not sure how well that's keeping up with inflation these days. But what is keeping up well with inflation is your real estate. At the end of the day, it's a human experience where people are thinking about general day-to-day happiness. And the husband's very debt averse and resistant to it. And then the wife is like, I have to do this. I'm not staying in this neighborhood. Right. So that's for them to work out. But the reality is the only way that it's possible for them to pull this off is a reverse mortgage. Why? Because there's no
payment.
Right. All right, welcome back, everybody. Your host and co-host, Jason Thibodeau, Mike Rambo. We're with JMJ Financial, as usual. Today, we're going to talk about the market at a high level, but first thing we want to chat about, like, in other words, where are interest rates going as we head to the end of the year? What's the Fed going to do in the September meeting? But first, we want to talk about something that's becoming more and more relevant and popular in Southern California, demographically, just even nationally. We're getting older as a nation, and then there's particularly older spots. Southern California definitely is part of that, and where we live in particular, in Huntington Beach and Orange County, certain parts of Orange County is getting quite a bit older on average. So the reverse mortgage topic is coming up a lot more than it used to, I would say. Is that fair to say?
Yeah.
So we're going to talk about how people are taking advantage of it. You know, I know there's some stigmas tied to it, some resistance tied to it, understandably so. And a lot of that has to do with just lack of education and confusion. So we're going to address that head on. But also a reverse mortgage, well, I'm going to actually let you start because I totally missed my thought. But what do we need to know about a reverse mortgage? Oh, I remember what I was going to say. You can purchase with a reverse mortgage, which a lot of people don't know. And then you can refinance an existing forward mortgage with a reverse mortgage, which I think people are more familiar with that.
Right.
So what's your take?
I think it's a tool to use in the right situations, right?
Not a one-size-fits-all.
Definitely not. There's lots of loan options. A lot of them will have much lower fees than a reverse mortgage. So many times I'll try to see if something else works first. But if a reverse is the best option, then it's just a tool, right?
Yeah.
To your comment about how things have changed with it, that's a big piece of this, I think, because a lot of people are scared of reverse mortgages, and I think there's a few key things. One is that so much regulation around it now. You have to do counseling. There's 100 disclosures, and you're pretty well educated if you're getting a reverse mortgage now. The other thing is that a reverse mortgage is non-recourse. So people get worried and say, oh, the bank owns your home. It's like, well, if you have a loan ever, the bank owns your home.
Right. Yeah.
But it's actually safer in this regard than if you have a forward mortgage or just your average mortgage.
Are forward mortgages recourse? Because I thought in primary situations, they're all non-recourse.
If you're underwater, you short sell, right? With a reverse, you can only own 95% of the value.
That's right.
You can't be underwater.
Kind of counterintuitive, isn't it?
It is.
Yeah.
So it's actually safer in that regard than a traditional mortgage.
But like realistically, and that's the big piece, right? The bank's going to take my house. I'm going to lose all my equity.
Right.
But there's nuance to this. Like from a basic average loan to value standpoint, if you had to guess off the cuff, what would you say your max loan to value, generally speaking, is on any given reverse mortgage?
60 max.
I think that's high.
It's for what I've been quoting lately. It is high.
Yeah. So because the HECM, which is, I don't know, in the reverse mortgage world, there's private and then there's government. The vast majority of reverse mortgages are government.
Yeah.
HECM, home equity conversion mortgage, FHA. I don't know if that's 8 out of 10, probably. I would imagine. And whenever I run the numbers, I am like 40% LTV.
My ones recently have been more around there. Yeah.
Yeah.
Age is a big factor.
Age is a huge factor, right?
Yeah.
Yeah. Because if you are 83 years old and you're still pretty active and still have your mind and you're still really self-sufficient and independent at home, maybe it's a different story.
Right.
Right. But most people at that age have paid for homes or very little in the way of the mortgage if one exists at all.
Right.
Yeah. So
it's great for somebody that needs cash and doesn't have access to other kinds of financing, which was the recent one I did. Or if you need more cash flow, right? So the two that I've done that stand out is one lady had a loan amount that was around, I think, 800,000. So by doing a reverse, she freed up, it was like $4,000 a month, and their retirement age. That's a lot of money to go spend on your grandkids,
Yeah.
travel and to do life, right?
well, and there's a quality of life factor here, right? I mean, the reality is a big percentage of retirees have fixed incomes. And then I'm not sure how well that's keeping up with inflation these days. But what is keeping up well with inflation is your real estate, you know?
Yeah.
And there is something called, what do they call it? Cash poor, house rich or something like that. Did I say that right?
Yeah.
So you kind of have a decision to make as a senior citizen. You have to be what age? At least 62 years old?
Yes. And then there's portfolio product that's 55.
55, right? So there's a decision to be made here. You know, there's all kinds of scenarios where I've encountered people who have been in their forever home for decades, and the neighborhood's not what it used to be, and they're starting to feel a certain kind of negative energy around where they live, and they want to move, to a nicer area, right? But because what? Quality of life. At the end of the day, it's a human experience where people are thinking about general day-to-day happiness. And the husband's very debt averse and resistant to it. And then the wife is like, I have to do this. I'm not staying in this neighborhood.
Yeah.
Right. So that's for them to work out. But the reality is the only way that it's possible for them to pull this off is a reverse mortgage. Why? Because there's no
payment.
Right.
Yeah.
Yeah.
Yeah. Yeah. And like for the one I did recently, the home needed work. Like the appraiser called out a handful of things that needed to be repaired. And one, she didn't have the money to do the repairs. Like she needed money. That's why we were doing the loan.
Yeah.
And through a reverse, you're essentially able to put money aside through the loan that would cover the repairs, essentially.
And what do they call that again? A set aside or something like
set
that?
aside. Yeah. So there's a
financial set aside. I can't remember.
I don't know if they called it anything outside of just set aside, but the other set aside that's common is that if the lender deems you need to have a set aside for your property tax and insurance because your debt ratio is high or you have a lower FICO score or whatever the reason is.
Yeah.
Yeah, they call that a LISA, life expectancy set aside.
Yes.
So depending on how old you are, they'll determine how much money they want to put to the
sort of morbid. They determine when they think you're going to die.
It is.
And then they calculate how much money for property tax and everything else you're going to need.
Yeah.
But the thing is, can you tell they're actually paying attention here? Right? They do want to set people up for financial success rather than financial failure.
Yeah.
And just going back to the main resistance to this product is people are always feeling like, well, I'm giving my home away.
Right.
Right. But you have to decide, are you trying to leave every last penny to your children and you're willing to live for the next 5, 10, 20 years with, top ramen as your general day-to-day meal? Or do you want to travel? Do you want to buy the RV? Do you want to explore or live your life to its fullest in retirement age? And, that's a spectrum too. You don't have to fall in one category or the other. Maybe you're somewhere in between. But there are ways to structure this to, I think, let you have your cake and eat it too.
Yeah. And that is always really the first question I bring up to people is how important is the equity to you to pass to your heirs? Yeah. And sometimes the answer is, I don't have heirs to pass to.
Yeah.
Or I have other things that I'm passing to them, right? So yes, with a reverse mortgage, you're not making payments, so your accruing interest and the loan balance does go up. So usually it is the heirs that like it the least because that it does eat into the equity.
Can I just say something there?
Yeah.
I have parents, and
I do too, by the way.
Some don't. Some aren't alive. And I told my mom, because she's considering this right now, to upgrade her quality of life. And I told her, if this is an issue with my siblings, write me out of the trust, or specifically write my portion of inheritance is earmarked for the negative amortization, the reverse mortgage, because I don't care. Like, it's like every child is different. Some are clamoring, waiting for mom and dad's house. I can't wait for them to die, right? Others are like, please, don't worry about me. I want you to enjoy the rest of your life. And again, that's also a spectrum, right? But that stuff riles me up a little bit, to be honest with you, because I think kids like clamoring for their parents' inheritance is a bad look.
Yeah, 100%. So the other thing that we were discussing on this topic of the negative amortization, though, is that it's quote unquote eating the equity. However, when you look at the appreciation on the property,
this is the piece people need to understand.
Is that sometimes your net equity is still growing because of how much the value of the property is growing. So it's a standard form that comes with every reverse mortgage. It's part of the disclosure package that will show how much the expected loan balance is each year going up. And then they'll give an assumption of appreciation. So whether it's 3% or 5%, and then they'll give a home value. So you take new balance new home value minus new balance, and you have an equity number. And a lot of times that equity number continues to go up for 10, 15, 20 years. Sometimes I see it go all the way to the bottom of the sheet. So it's in many cases, it's many years before you're actually quote unquote losing equity because of the feature of the reverse mortgage.
I agree with that. And I think that is the piece that a lot of people aren't really, this is the nuance, right? Where people aren't really paying close enough attention to. No one can predict the future, what home equity appreciation is going to do for any particular marketplace. We're talking more in aggregate, on average, in the long run over the course of the next 10 or 15 or 20 years, depending on how long this borrower lives. And usually in a long enough time horizon, you can count based upon like we're a debt society, we're a credit society, and inflation has to happen in order for us not to have economic collapse. Therefore, assets go up in value. And that's just how it works, because if they don't, we have deflation, and we either have the next Great Recession or Great Depression, and we all don't want that. Why do you think the current administration is doing what they're doing to keep everything afloat? Why do you think it's so important for the Federal Reserve and the government to keep the stock market afloat, right? The moment 401ks drop significantly, wealth effect goes down, people stop spending, now we've got a problem, right? So all that ties back into why, in a basic form, homes over the course of a long period of time appreciate.
And with reverse mortgages, it's a loan. And in most ways, outside of the feature of negative amortization, meaning loan balance grows and not making payments, it's just a loan. So common questions are like, how do I pay it off? It's like same way you pay off any loan.
Right? No different from any other loan.
Use cash, you refinance it. If you sell the home, you pay it off. There's no prepayment penalties because primary residences, there's never prepayment penalties. The whole bank owns your home thing. It's like, well, there's a deed of trust for the loan, just like any other loan, right? But as long as you stay in good standing and make your payments so once again, no payments on this, but the requirements are you got to live in the house and you have to continue to pay your property tax insurance to maintain the house. If you do those things, you keep the house. So in most ways, it's very, very similar to any other loan.
I have a client that lives in Marietta right now in a senior community and is getting tired of the heat and the drive. We live in Orange County. So what does that drive like? You know what that drive's like, actually, specifically because you're used to driving to the Inland Empire for family. I think Marietta is even worse.
It's a little farther.
A little farther, right, because of the 15. But I'll just spill the beans. It's my mom. And I'm like, at what point, because her husband can't drive because of a medical issue, and at what point do we as a family start collectively questioning my elderly mom driving in that traffic every day to go see her family? Right.
And it's since COVID, it's been really bad.
It's been really bad. We're talking the 91 and the 15, and then obviously at some point the 405 and the 55. They're all terrible. Right? And I'm just like thinking to myself, are we like, as a family, collectively just like I don't know what the term is, but claiming ignorance over this. Oh, I wasn't thinking about it. For me, I'm like, I could be intentional about this and have her live in a community like Landmark in Huntington Beach and be 1 or 2 blocks from my house, right? And as she gets older, that's probably going to be a lot more important.
Yeah.
And what I'll tell you is in the 5 years she's been in that, right before COVID is when she bought it, the appreciation was pretty lame because it's Marietta.
Yeah.
Not as many people want to live there. And how much money did she leave on the table by not owning in Orange County? And all I'm saying is if she did pull the trigger to get a reverse mortgage to live in a more expensive area in Orange County and Huntington Beach in a senior community, yes, it's going to be more expensive. Yes, it's going to require a reverse mortgage. But it is going to potentially save her life in terms of stress, the commute. But also, at the end of the day, home price appreciation in Landmark has always been strong.
Really good. You're
right?
A mile to the beach.
Yes, a mile to the beach. People want to live there. And so my argument is by you not doing this, you're actually probably costing yourself money. Not only did your quality of life improve, your investment in the long run, even with a reverse mortgage, is probably better positioned than if you stayed put. And some would say, oh, debt averse and do the frugal thing and do the right thing and don't be too risky. But in my mind, staying in Marietta is the risky thing.
Yeah.
Do you hear me on that?
I do. Yeah.
But now I have to deal with siblings and everyone's opinions, right?
Yeah. Yeah. As you're talking about this, the one thing I knew about real estate before getting into real estate was location.
Right. Makes all the difference.
I don't feel like that's talked about a lot, actually, when you're in real estate.
It's not just in real estate. Look at the mainstream media. Yeah. Oh, market's crashing. And okay, what are we talking about exactly?
Right.
So market's crashing applies to all markets in the United States? Right. That's so ridiculous.
Right. Yeah, we're not crashing in Orange County. There is softening happening throughout the U.S.
Sure.
And there are parts of California that are having some softening. I've heard on
just compare Orange County to LA County.
Yeah. But there's parts that are still doing really well. Yeah. And it's, there's different options that people can look at, right? So like with this recent client, the home was free and clear and it was worth about $850. So it's like you could sell the property and now you have all these proceeds to go live. But when she didn't want to move, right? It's the house that she grew up in. It was her parents' house. And
so she wants to be there.
Well, she wants to stay. Yeah. And that's the case for a lot of people doing it.
Sure.
That's another key reverse saying, right? Age in place. That's what the point of a reverse is. The other thing is, and this is another like power of real estate story, is that, did I tell you what her monthly expenses were for the house? $300.
Yeah. Property tax is super low.
Property tax got carried over from her parents under now Prop 19.
Prop 19.
So $150 a month for property tax.
Because she moved in.
$150 a month for homeowners insurance. It's free and clear.
Yeah.
So you go sell, and if you want to live, LA, Orange County, what at minimum?
Well, now you're $15,000 a year for property tax.
If you bought again.
Yeah.
Or if you go rent, you're $3,000, $4,000, $5,000 a month in rent.
No, you're not going anywhere.
Yeah. And, you should have gotten a nice large lump sum of money, but still, it's like that's a lot of costs that just start piling on, right? So staying in the house was a really, really great option. You're once again talking about people of retirement age, so not a lot of income coming in either. So now she has income from the line of credit that's available through the reverse.
Yeah.
And kind of a good feature of the reverse as well is that you can use that equity, or the lender considers the equity as a part of the qualification. You're doing a regular forward mortgage. It's what's your income, what's your debts. You come up with a ratio. Yeah. Equity is not considered.
Right.
For that piece of it, right?
Yeah.
It is for a reverse.
Yeah. There's all kinds of scenarios, isn't there?
Yeah.
Where someone should choose a reverse for reasons that you just laid out.
Yeah.
We just closed a reverse purchase. Someone had a decent home in the LA market and fell in love with the property. And initially the thought was this wasn't going to work. And of course the reverse mortgage topic came up, and guess what? He owns the home now.
Yeah.
Yeah. And he's upgraded his life circumstance. So I don't know, like, you can't take it with you, folks.
Yeah.
And I feel like, in my opinion, your general quality of life should supersede how much money you're leaving at the end of the day when you die. That's my personal opinion.
Yeah, and I think leaving money to heirs or a charity or having some type of legacy in that capacity
At what cost?
is a great thing. But yeah, what is the cost?
Yeah.
Well, and this kind of a morbid conversation, but I've had conversations with some of my family where, it's like, what happens if you can't make somebody's funeral? And I'm like, I'd rather that I got to see them while they were living.
Yeah. Sure.
So, yeah, make the time while you have it. Kind of thing.
Yeah, that's a good point. All right. I guess I'm complete on reverse mortgage unless you have anything else to say on that topic.
No, I think we covered all the ground and some. It's a tool. It's not the perfect tool for everybody.
Yeah.
It's a tool.
You have to get educated, you guys. Like, don't make assumptions. Don't make decisions based upon knowing 5% of everything there is to know on a very complicated topic. Talk to an expert. Talk to somebody. And then in the world of mortgage, there's call center people with reverse mortgages. There's just the scum of the earth that you can end up with. So you do have to be careful who you're talking to. People who have integrity, some empathy, and a desire to actually make sure you're set up in the right situation is of the utmost importance. Lenders are a dime a dozen. Barrier to entry is low. Be careful who you hire.
Agreed.
Yeah. All right. In wrap up, do you want to talk about the Fed and where interest rates are heading towards the end of the year?
Yeah, we could. Because it's...
where are interest rates heading? People want to know.
Because maybe it's good news after a more serious talk, right? So...
Maybe is the key word.
This is true. So we'll play fortune teller for a minute.
Yeah.
So after the mortgage industry has promised rates to come down for like 2 or 3 years now, it certainly feels like writing's on the wall. And, we talk about how Fed rate isn't mortgage rates. Mm-hmm. Sometimes they go opposite of each other. That happened last year this time where the Fed lowered rates and the rates went up.
Well, yes, but like job numbers were blowing out of the water. Yes. Economic data was robust and strong. So that's always going to boil down to that.
So job numbers went crazy, right?
Yeah.
So in, I think, recent times, my gauge is when the job numbers come between 100 and 150,000, you call it a nothing burger. Like the market just doesn't do anything.
Yeah.
It's kind of typical. So last year, the Fed lowers rates and suddenly we get 250,000 jobs getting added every month. Mm-hmm. And while that sounds great for the economy, that does the opposite.
Inflation heated up too.
So, but what's happening right now is that we had a revision for a month that went down to tens of thousands, right? Was it 20 or 30,000 or 50? It was a very
14,000.
14,000. And another month, same thing, was like 15,000-ish.
Essentially zero.
Yeah, essentially zero. And then a month with down to negative jobs. And they're talking about a revision for the most recent report that will also result in negative jobs. So you have 4 reports in a row that do not show job strength.
Well, and just look, I know it's anecdotal, but man on the street, Main Street, not Wall Street, not mainstream media, not Wall Street, not fintech, financial influencers on X or Twitter. We're not talking about those people. We're talking about regular people. The struggle is real. Mm-hmm. Everywhere I look. Yeah. I don't feel like people are feeling abundant, with obviously exceptions, but we've been in a restrictive territory for 3 years now. Mm-hmm. This is what's supposed to happen. This is how it's supposed to feel. And eventually the most lagging data that actually shows up as weak is jobs. Mm-hmm. Are we there yet? It appears we are.
Yeah.
And we're about to get a lot of data. PCE Friday, next Friday after that, jobs report, on September 9th, the QCW revisions, which is going to be a big deal, right before the Fed meeting.
So the last time I checked, there was like a 90% chance that the Fed's going to cut a quarter in September. Yeah. I think if we have a really weak jobs report, it could be a half.
Now, again, what if PCE's hot? What if we have a strong jobs and upward revisions? Who knows, right? Yeah. Like the thing about the data is it always feels like it throws us curveballs to the downside or to the upside. It's so random.
Yeah. I'm putting my chips on that they're going to cut, because when you have 4 in a row that was really, really weak, even if there's
that's a trend.
Yeah, it's a trend. Yeah. So then from there, it's just how much and how fast. And I mean, they're saying maybe this first one's 50, but I think it's likely that we see 3 in a row. Yeah, where they cut a quarter each time.
So you're saying there's a chance?
There's a chance, yeah. And then, as it said, Fed rate does not equal mortgage rates,
Right.
but when you look at the charts, historically, they do tend to move
Yeah.
together eventually.
Yeah.
So in mortgage, we're optimistic that we'll see some relief
Right.
towards the end of this year too.
Yeah, and the reason for that is the reason the Fed is cutting is because there's weakness in the economy.
Right.
And weakness in the economy always translates to lower
Lower
rates.
mortgage rates. Yeah.
So whether or not the data will continue to show up hard and soft data as soft or weak is going to be the question mark. And this is the closest we've ever been and the most we've ever been convinced that it has staying power, like weak data.
Yeah. I would agree.
Yeah.
Yeah.
Okay. Anything else, Mike?
Don't think so.
We did good today. Hopefully you found value. If you did, please like and subscribe. Thanks for listening. Until next time. Bye, guys.